In this video, you will learn exactly which key concepts you have to be looking at in the market if you want to develop a trading strategy and a trading plan. And to show you this, I will be taking a pair, analyzing it from a technical and COT perspective, and by taking the combinations of these two different analyses, you will learn exactly how to approach the market and which trading opportunity we can be looking at on the pair that I will be analyzing. So the video will be both educational and practical because you will see exactly which trading opportunity you can be looking at on the pair. So I suggest you watch the video until the end. Now, if you're new to the channel, I'm a top author on the TRADINGVIEW platform and I share free education analysis on all my platforms daily. So I suggest you subscribe and I will see you in the video. In today's video, what I want to speak about is the situation that we currently have on AUDCAD. And the reason for which I selected this pair is because it's a very interesting instrument and market to follow at the moment for a potential trading opportunity. And you will learn why during the video. And you will also understand exactly which are the best things to look at in the market. So let's start our analysis from a top-down perspective as usual. So let's start from the monthly time frame and see what kind of confluences we can see on the monthly. Now, on the monthly time frame of a AUDCAD, what we can see is that the market has created this bearish W formation. So an impulse to the downside, retracement, creation of a lower low, and then a higher high. Now, when the market creates this kind of movement, this is a bearish W formation, meaning that the last leg created an overextension in the market, and you can expect a retracement to the previous resistance, now turns support, aka the neckline of the formation, before the continuation to the upside. Basically, for the market to go and grab some liquidity and then at the neckline before the possible continuation to the upside. So in general, you want to see the market create a wave to the downside to go and test this zone. So immediately, by looking at the monthly time frame, we have our downside target in mind for this pair, which is this zone here. Perfect. On the monthly, we have already identified the target to the downside. Let's look for some more confluence. Now, if you basically look before this move to the downside, where is the last time that the market had made a move to the upside? It is this zone here, right? From here, the market had created this green candle before starting all this movement to the downside. So this is the last time that the market moved up before melting to the downside. So this is a level of previous support now turned resistance, aka a structure level. So a level of resistance, a level of supply. Now, if we are to basically show this area on the chart with a box, and if we extend this box to the left, what we can see that this was a historical structure level for AUDCAD because it was acting also in the past as structure support. So this makes the zone even stronger, because if it was acting here as strong support, again as strong support, again as strong support, again strong support, so every time creating strong rejections away from the area, this was all very strong support, and now is turned inside of this area strong resistance. So we have a market that on the monthly time frame has approached a strong resistance area, plus has created a W formation, a bearish W formation approaching this resistance area. So confirming that we definitely want to see our downside target get hit. And move to the downside on the monthly to start. Perfect. Let's move down on the weekly. Now, on the weekly time frame, what kind of situation we have? Now, on the weekly time frame, we kind of confirm what we have on the monthly. Why? Because here on the weekly, we can see that this previous resistance, again resistance here, again resistance here, is turned support here, which is exactly the level that on the weekly you would want the market to go and test, which aligns with the neckline that we had on the monthly. It's basically the same zone, which is the area that you want to see the market go to grab some liquidity and complete the monthly W bearish W formation. So everything up to now is combining. This is definitely strong structure, and look at what happens if we extend the zone to the left. You can see this is a historical structure level for AUDCAD. Very strong support, very strong support, very strong resistance, very strong resistance. Again, acted as resistance, now it's support. You can see this is very accurate. On the weekly time frame, we can see it even better. So now on the monthly and weekly, we all have our downside target in mind. Now, if the market from here created this impulse to the upside, if you want informations on the possible retracement, how are you supposed to be taking your Fibonacci? From the low to the high of the impulse. And what you can see that the target is in between the 0.618 and 0.786 Fibonacci retracements if the fib is taken on the impulse, which is our target zone to the downside, which is a target that makes a lot of sense. Now, before going down on the daily time frame, where I want to show you some very key concepts, so keep watching, let's go and see what kind of situation we have from a COT perspective, so commitment of traders, what the non-commercials in the market are doing, so the biggest speculators, the hedge funds, and by looking at their orders, we can definitely gain an advantage over our competition in the market. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. Now, if we go and see, we were at minus 54k net positions here, so the lowest level that we had, and now we're sitting at minus 36k. So net positions have increased, meaning basically the disparity between the longs and shorts has actually increased. In fact, here we had way more shorts than longs, with 103k shorts and 49k longs, and now we're sitting at 66k shorts and 29k longs. So obviously decreased the difference between the longs and shorts, and the exposure at the moment is 47.9% on the short side and 21.5% long. But keep in mind that with the last report, they have closed 800 shorts and opened 3.3k longs. So overall, in the long term, AUD bearish, we can definitely expect a move to the downside. However, with the last report, a little bit longs added and shorts closed. Keep this in mind because it will be important on the daily time frame when I will show you the concept that I want to now show you. And let's also give a quick check at what we have from a CAD perspective. In fact, we had here minus 35k net positions, which is a strong shift from the positive 38k that we had here. So in the long term, what happened on the CAD? We went from having way more longs than shorts from an institutional perspective on the CAD. In fact, we had 74k longs and 36k shorts, to having way more shorts than longs, 58k shorts and 23k shorts, so with a negative reading minus 35k. But keep in mind that with the last report, in the short term, net positions have increased from minus 35k to minus 24k, and with the last report, hedge funds have added 2.5k longs and closed 5.7k shorts. So we can expect in the short term the CAD to get stronger, therefore driving possibly a AUDCAD to the downside. Now, we have spoken about the monthly and the weekly. This is our overall downside target. Let's go down on the daily and see what kind of situation we have. Now, on the daily time frame, we can see that we have a completely different scenario. In fact, the market has created a strong impulse followed by this correction. So many people will do this, okay? They will identify basically this correction with this downside channel, and they will say, okay, we will have correction and then continuation to the upside, which is very possible. However, as we have seen, we are at a level here, all this level here is strong monthly resistance, as we have identified at the beginning of the video. Therefore, I would never be looking for a longing opportunity at a monthly resistance area, because it makes no sense, since we also have the bearish W formation and we want to see the market make the move to the downside. Okay, we want to see the market make the move to the downside to complete the monthly pattern. So how we will be approaching this with students? Now, at the moment, everything is still bullish. Support is holding, the market is still respecting also this counter trend line. Everything is holding to the upside. Okay, there is no way to be looking for a shorting opportunity yet. But one thing is for sure. On the AUD, hedge funds haven't added proper shorts yet. If you remember, the opposite actually had happened. They started to add some longs. So how can things actually play out? Which is the best probability scenario that this pair can print out in order for us to be looking for a potential trading opportunity? Exactly the same as with Euro USD. If you remember, with Euro USD, we wanted to see the market create a higher high and then start the move to the downside. This is a very similar manipulation scenario. If the market will start a new move to the upside, okay, and the market will start printing a strong candle to the upside, showing strong buying pressure, what most people will do, they will start buying. And that is exactly what hedge funds need to actually start shorting. They need to generate the liquidity to add their shorts. So if everybody starts to buy, they can start shorting and use the liquidity given by the buyers to short. That is exactly what we will be waiting for with students. After the market will create the manipulation, only after that, what we will be doing? We will be monitoring on the 4-hour time frame inside of this area. Why? Because if the market just starts pushing to the upside, we can't just short immediately. We have to wait for the market to shift back down to a bearish market, and then we will start monitoring price action on the 4 hours, waiting for the market to provide to us one of our valid entries. We only take the trade if all our rules are satisfied. And as soon as the market will satisfy all our rules, we will be taking a very nice short position with a big risk to reward and very good probabilities for the move to the downside, completion of the W formation at the monthly neckline, creation of this double top and formation, and then we will have another very good opportunity because the market will have created this M formation, and we will definitely be looking for a possible buying opportunity from here. But about the possible buying opportunity, I will speak about it if the move will actually happen, because always remember, trading is reactive, not predictive. Just because we want to see this happening doesn't mean that it will happen. That is why we have to wait on the 4 hours to see, and most importantly, let the market show us what it actually wants to do. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them with me each and every day. In fact, I give you a complete market breakdown showing you exactly how to apply the strategies with entry, stop, take profit, and I also answer every single question that you have every day, including the weekends. So it's a very complete program. I suggest you go and check it out. Link is in the description, or I will see you in the next video.